Hello, good morning, good morning. Morning, good morning. See, what do we have today? Calendar, we got a core PPI today. That's going to be 30 minutes into New York session. It's like we're expecting an increase here, which should be actually good for the dollar and further downside for gold. So we're currently 0%. There's a pretty good chance we get above 0. I get some red over here for 0.2. And yeah, I mean, like this core PPI. So if you're going to be trading during the New York session, watch out for that event. That's going to be affecting potentially your setups. But right now, Goldie is down 3.80%, 88%. Price is just been pushing crazy. Remember we spoke about this yesterday, chat. Remember what I said? Like the weekly candlestick will most likely need to pull down as the week is coming to a close. So we're going to get like a Freaky Friday. So I was actually surprised to see that already happened yesterday. Yesterday's candlestick, I don't know if y'all saw this, but yesterday's candle from wick to wick is like 5,000 pips. I've never seen that before. Man, I know people right now who made like $1 million just off of gold shorts. Insane. Freaking insane. Like, when did that even happen? Let's go on our kill zones. That dump happened at around New York session time. That was about an hour 40 minutes into New York session time. Then we had that big dump. On the Forex Factory, we didn't have anything coming out at 9:40. The only news we had was unemployment claims coming in at neutral at about 8:30 a.m. So I believe, we are due for some kind of interim pullbacks anyway on gold spot. So I think that's what that was. Right now, we don't really have any catalysts to keep pushing us up. And honestly, the way gold has been moving, it's been vertical. Like, it's just been straight vertical like this. So it's only about time that, price is going to start retracing. And that probability was just only going to increase towards the end of the week. Because the weekly candlestick, you have to imagine it's just been like this the whole freaking week, right? So it needed to start having pullbacks. So imagine that weekly candlestick pulling down like this. This is like a massive wave. That's a massive wave. Now imagine the weekly candle pulling down like this. Also, what kind of moves that's creating there on the LTF, So I think that's why we're also seeing a lot of this volume starting to come into the market. We just got the London session open up right now. You kind of want to be careful, I guess. It's like a double-edged sword, of course. If you're not careful, then obviously, you can lose a lot. So that's why for us, we love our impulsive entries, because with our impulsive entries, they're meant to push through those levels, correct? So we're meant to always have orders be coming in during those points, right? We're always supposed to have orders coming in. Nice. Yeah, I got TetraFX community over here. We got the Tates. We got the Tate. Andrew, Tristan. This guy's... Oh man, I think this guy's going to jail, man. I think Andrew's going to jail. It's only about time. It's only time. It's only time. He only has time right now, but I don't think it's looking too good for the boy. This is Romania right now. As soon as they're done with this case in Romania, they're going to extradite him back to the UK. Once he's in the UK, it's curtains. It's curtains. So we'll actually see how that plays out. At the end of the day, money is not everything, chat. Depending on how you make your money, money is not. It's not worth that additional stress of potentially, having to go to like prison. So we'll see, man. We'll see. I wish the best for the guy, though, man. I hope he pulls through somehow. Money at the end of the day talks. So maybe he's just gonna bribe some people there in the UK and he's gonna get let off with something a bit light. He does have a lot of money. I'm pretty sure this guy is up hundreds of millions. It's probably worth hundreds of millions. He claims he's worth $1 billion, but I think it's somewhere around the hundreds of millions point. I don't think it's touched $1 billion. Mr. Beast is worth like 2.6 billion. See, the market makers, after seeing VIX performance for January, this has to stop now. Oh, we gotta keep pushing, my friend. Like, especially now that I've been prepared for this since 2025, and I've been telling you all since 2025. 2026 is gonna be a game changer, especially if that volume continues the way it was towards the end of 2025. Yeah, I haven't been really fearful of the markets of late because I know like once you get these entries, like look at these wick breaks. Like price literally just broke this wick and pushed down like 50 pips. Bro, my stop loss is like 16, 20 pips. This signal that we had this morning, as soon as we broke that wick, you see right over here, I was like, all right, so you know, it looks scary the way it's coming down. But as soon as we break that wick, this thing's gonna at least give us like 30 plus pips before any sort of retracement. Any sort of retracement is just gonna go through that level. Funny thing is, it even did retrace. The funny thing is, it did retrace, and it didn't even like spike above 17 pips, like 16 pips. It didn't even spike above. Even with the retrace, it's still respected the kind of way we would still take it during normal market conditions. So yeah, I've been noticing that a lot. So it's got me quite confident with look at this shit. Like, look, this is exactly what I mean. It just broke this wick, for example, right over here, and just freaking melted. Like, how many pips is this, chat? We just melted like 139 pips with zero drawdown. It didn't even freaking pull back up. So that's what I've been taking advantage of as well. It's basically the same entry models, but it's what we already kind of expect, but on steroids. Pretty much that, and on steroids. And yesterday was crazy because I got a 2000 how much was 1,700? Yeah, it was like, I think 1,700. I didn't even plan to make that much money yesterday off that sell, but since we're pushing so much, it's just, when I closed it, I was like, what the hell? How did it get to 1,700 already? Because that was the first time that had happened to me, like this whole time, that I actually closed with a lot more than I planned to close. But then you saw what happened yesterday. Price dumped like 4,000, 5,000 pips. And then today, in the morning, when I was waking up this morning, I was like, oh, man, like, do I even want to trade? I'm already up so much for the month. I look at the trading view. Man, I look at my trading view this morning and I see price is down 3 point something %. I was like, what? How are we down 3% already? I'm just waking up. I'm just getting out of bed. So I was like, okay, now I have to get out. Now I have to get out of bed. If price is down 3%, there's no way. There's no way I'm missing out. Like, I'm just going to force myself, get out of bed, take this trade, and call it a month, you know. I think that I didn't plan to make that much money is going to be the vibe for 2026. Yeah, exactly. Man, like, I saw a guy make $1 million yesterday. I was like, shit. Because I don't hold trades like that. I don't hold trades like that. I'd rather just like trade normally, like get my trade setups 1-2 trades a day and just call it a day, see what the market gives me and move on. But yeah, some people like that. Some people like don't trade as much. So what they do to compensate for that is to hold really big trades. For me, I trade quite a lot. I took like 45 trades this month here already, which is the most number of trades I've ever taken before as well. 45 trades. Yeah, I would just keep pushing, man. You know, it's like, it's all in your mind. Like, if you don't believe that the market's moving and you can't make money, then it is what it is, you know? Like, you have to shape your own reality. You have to see what it is. You have to see the market for what it's doing right now. Look at this, just breaking some wicks over here. Just that small little break over there is already dished out about like 23 pips. Like, the way candlesticks are moving right now is just, I don't even have any words for it. Look at this. And it's respecting structure as well, which is a beautiful part too. Like, look at this little shotgun play here, little consolidation breakout to fill the range on the left-hand side. That's also the surprising part. Like, it's still respecting structure to the T. All right, look at this little accumulation breakout to the downside with shotgun entry model, clean range. So it's just like, man, if you're gonna put yourself in a position with the right foundation, these opportunities, they're gonna find you, and that's what it is. It's like always putting that work in, and then it's like, what do they say? Luck meets talent, or something like that. There's a saying like that. Like, you work hard, and luck meets talent, or some of the sort. Hard work. When hard work meets opportunity. We got Gbpjpy here also in a sell position. Took a sell right through it. Nice little bomber clot trade. That bomber clot. Straight profit. Let's go. It's like hard work meets opportunity, right? Hard work meets opportunity. That's what it is. That's what it is. So you lock in, you lock in, you lock in, and then when those market conditions come again, you strike. That was my whole mental model during COVID. During COVID, man, I saw guys making so much money. I was like, okay, my time will come. My time, it's not going to be COVID. It's not going to be this year, but my time will come. What is this guy? I can't keep getting away with this. Making me double screenshots. W. It's getting scary, guys. Putin's rare nuclear warning as Iran-US war countdown begins. Russia preps Bouger exit option. It's getting scary. I don't know. Something about Trump's energy as well of late has been making me feel that he's kind of losing the ball. Like he's kind of like his streak is kind of coming to a fumbly end. I don't know what it is, but something just does not seem right. Especially with what's happening with ICE and everything. They're like be conjuring up a civil war there in the US. You know, so some says you can't be scary. You can't be scary. Please stop spreading unnecessary panic amongst the community. We have seen plenty of similar headlines in the past and months and years. Here, Times of India, Putin's rare nuclear warning. Let's see. I don't think the aliens are gonna allow us to nuke ourselves. Probably when they actually start shooting out the nukes, we'll just see some kind of a force field. Ooh. But like, you cannot destroy yourself, Earthlings. You're too important. That would suck. After all this progress, then just nuke the entire planet. Like, what is it for anyway? At the end of the day, why even do any of this if we're just gonna nuke everything? Correct? Like, just so we can start again. You know, civilizations have started again. It's not like it's never happened in history. Let's see, 5200. 5200, break of the lows, boom, 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 fill up the range. Down towards like 5160. That was also the trade that we called yesterday, which played out beautifully. I don't know if you all caught it, but we caught it like after stream as well. So the whole idea was the price was gonna come and fill. Remember we spoke about this before stream. We had this little range over here. So we ended up taking that sell when it started breaking below that accumulation, right below 5500. And the idea was that price was going to come and fill that range down towards a support. So that was yesterday's move over there, which is pretty nice. Then today's similar situation was a little accumulation break with clean range on the left to fill down towards like 5156. And I see the similar thing over here too. Break below 5200, down towards support by 5160. WW trade. Let's see. You also got the fake out confluence. If price breaks out, if price fakes out and breaks below 5200, there's a high probability of price filling the range up to 5150. Awesome. Yeah, this is amazing because you also anticipated the fake out right over here too. So you got that reversal play. Reversal confirmation. Boom, boom, boom. Break of the lows to fill up because now you spotted the fakie. You spot the fakie. If price has struggled to move up like this, then starts breaking below that support. Pretty good chances coming down towards like 51, 53. So very well done, Gbpjpy. Man, just keep this up. Keep this up, and trust me, you're on the right path. Like, trust me, you're on the right path because you can see it. You can see it, right? There's only a certain ways that you're gonna trade the market, you know, because like everybody gonna look at the same structure here, and there's only a certain amount of ways that you're gonna be able to dissect that. You know, so you have to keep using that approach that makes the most sense to you. Because at the end of the day, that structure is not going to change. It doesn't matter what system you're going to be trading. That structure remains the same, right? So you're just going to see like who's better at like analyzing and reading it. And you've already seen those ranges are like magnets. You've seen even just by virtue of ranges, you've already seen how those ranges are like magnets. Right? You've seen that day in and day out, man. We do this every single day. Every single day. We post an Instagram video on my socials. We show you guys, we try and show. But at the end of the day, it's for you as a trader to execute. You need to find that inner trader in you that, you know, takes the risk, that executes. that executes. Because you can't call yourself a trader if you're just watching stuff and not learning and not building confidence and just waiting all the time for someone to show you the way. It's like you gotta execute. You gotta start executing, especially if the idea is there. You have to take the chance. That's what makes a trader a trader. That's why these traders in hedge funds get paid so much money, because those guys are every single guy on the desk over there has a responsibility, right? They have a responsibility to themselves to make sure that they're taking the positions they need to be taking and making sure that their psychology is not hindering them from performing. Because, you know, at the end of the day, it's just you against you, man. Like when the quarter ends and you got to go to the office, you got to go talk to the boss, you got to prove to the boss why you should even still be around. You know, you got to be a shock in this industry. You know, you got to tell the boss, hey, listen, I manage the best risk on my desk, you know, of my team. I did the best performance. I had really good ideas I brought to the table that netted us this, You know, I saved us from certain things. Maybe I brought some new clients on board. You have to do something. That's the whole idea behind a trader. So the more you get good at executing, the more flawless it's going to be. So once you get that confidence, that execution, but obviously first you need your systems in place. You only get your systems with good education. Also, people who find themselves in trading desks just don't appear there all of a sudden because they've already prepared themselves to be in that position, right? And once you get to that position, you must just execute flawlessly based off of your experience and not let fear hold you back, especially the fear of success. Don't let the fear of success hold you back. You know, it's not even the fear of losing sometimes, it's the fear of success. You might be too afraid to be successful. You're too afraid of what comes with success because heavy is a head which wears a crown, as they say. All right, so success is a lot more harder in the beginning to kind of if you wrap your head around what it's going to require of you, it can be quite intimidating. But don't get intimidated by that. Just embrace it. It gets easier over time. Just keep going in that same direction. Don't let people hold you back too. Some people are going to try and hold you back. They're gonna try and make it seem like they don't want you to be that successful. They're gonna make it seem like, oh, you can't be that successful. Yes, you can. You can be so much more successful than you think you can. You can do it. Everybody can do it. Just don't be afraid of success. Simple. That's it. But a freaking education is important. You know, you also don't want to be too reckless with confidence. It's also a balance, right? Don't let the ego come in. I'm not talking about having a big ego. Don't have a big ego. Ego is not good. Ego is not good. Ego is what destroys you. You just have to move cautiously and see where you've come from and how good you are right now and appreciate how much progress you've already made. Right? Don't always look into the future. Just look at how far you've come. Appreciate where you are right now, how much progress you've already made, and just keep doing that. Take a few more steps, look back, see how far you've come, appreciate where you are, and keep going. Don't look at what you still haven't achieved because that road ahead is never gonna end. Look backwards, see what you've already achieved. But right now, anyway, we got gold is accumulating by 51.83 and 51.28. So this is getting ready for potential bumper clot. I mean, we could do more than 5,000. This is a daily candle right now. We're down 4.17%. Man, that number there is insane. 4.16%. That number there is freaking insane. And I think we can actually bypass yesterday's volume if we're already down this much right now. But to do that, we're still gonna have to push down towards like maybe 49.60-ish. There's gonna be an additional additional 1,613 pips. Gold -7 today. Yeah, I could like -9.2, -9.20 probably even. Yeah, yesterday's candlestick was sorry, not -9. because this is the market open. Let's say from the market open, yeah, like -7. Yeah, you're right. About like -7. -7. From the open yesterday, we did -5. From the open, we've already done -5. So we could see that -7 mark. And that's going to line up beautifully with 5,000 psychological mark. Right over here. That's going to be, I believe that could be a target for gold. Because now that's going to be the most important zone for gold spot to hold, which is going to be like 5K. So that's most likely going to be the daily target over there. Crazy times. Yesterday, whip all my gains. Imagine people who bought yesterday, still waiting on the gold long positions. It was bound to retrace, but you see the way it's come down right here? It's actually created a nice little long opportunity as well. Like it's come down all the way here. It's kind of bottomed out by 5,100. So if it starts breaking above 5189, it could be the inception of a potential pullback to the upside. Nuke equals a fresh start. A fresh start. Yeah, with time, I guess. With time. Imagine like Chernobyl. Chernobyl still has so much radiation in that area. So if we can nuke the world, how long you reckon the radiation is going to be around for? Like even the people who survive, they're probably going to be living underground for so many years. Let's see, if the world was nuked, how long would it take the radiation to go? It depends on the type of nuclear blast. Huh? First 24 to 48 hours are the worst. By 1 week, radiation levels drop a lot. There's a rough rule called the 7 to 10 rule. After 7 hours, radiation drops 1/10, 49 100ths. After 2 weeks, much lower, but not zero. Short-lived. Bottom line, days to weeks, major danger fades. Months to years, most places safe. Most places safe. Decades, only the worst hit zones remain unsafe. Only the worst hit zones. I think also Trump is suing for, he was accused of some kind of a tax thing again. So, man, I hope that guy has his head on straight. It's still got the FOMC. It's still got the federal independence to worry about too. The Federal Reserve's really gonna be independent by June. We're gonna have the president be able to manipulate those rates now. That's why we're moving away from the dollar as well. So all this is actually making the world move even further away from the dollar. Market not good for trades? I would say they're really good for trades. I'm not complaining. I would just say, just be careful, I guess. If a lot of people, you know, without education, I understand it's dangerous. It's dangerous. If you don't have good education, if you don't have experience, I would say just be very cautious. Wait for them to slow down. Just wait for it to slow down a bit, like how it's doing right now, where maybe it can be like slightly, maybe a bit more predictable. Like, see if your entries can be getting filled in properly so you don't get slipped. Don't use like sell stops, buy stops, that sort of thing, because you might get slipped. So just see if your executions can be done in like a gradual way. So if you waited for price to break below the lows and it's breaking properly, then it seems good. You get in and then see it play out. You kind of make sure you got your stop loss, I guess. But definitely don't like take a trade and walk away, because you're gonna be in profit really fast. The same way you can be in loss. Because the idea behind a confirmation is once you get it, then price is supposed to move. So the market is in essence supposed to trigger directional bias by that point, so you can get your winning trade. So you don't want to walk away from the chop. But yeah, this is accumulating heavily over here. Really big range. This is like about 700 pips. You can navigate this volume only if you know what you're doing. Yes. Yeah, I got like these. This is the Pacific Ocean, I believe. Man, this is so crazy. The power of nature out there, huh? And you got these boats which are basically made out of metal. No idea how they even float. Just mashing through that wave. Sheesh. Yeah, the captain must be pretty chilled. It's a pretty cozy weather for an experienced captain. Just drink some tea and eat some biscuits as you're going through this. It's like an experienced trader in huge waves. It's like, you know, you're gonna be all right. You just gotta follow follow what you've been doing for a while. It's pretty sick. Sometimes I like to fall asleep to that stuff, to videos like that, like these really stormy weathers. Then I look at nature and I'm like, damn, how can nature be so beautiful and scary at the same time? Like, if you fall off that ship, it's curtains. I don't even think they're gonna do like a man overboard for you. That's already straight to stop loss. Weight distribution. I need speed to deposit my account. What's going on here on the 5 minute just created a resistance by 51.66. Definitely. Oh my days, look at this thing.
Why are you running? Why are you running?
It just broke some lows. So it just pushed heavy on the new 1 minute candle open here. It just dumped around 80 pips. Just a few seconds. 90 pips. Can we get 100? Come on, just do 100. 10 seconds left. Do 100. Oh, it did 100. Let's go. It actually did about 120 in the last 5 seconds. Telling you, chat, this is ridiculous. This is honestly ridiculous. You see, the good thing is like it pushes in that direction. Like it's not fluctuating. You know, if it fluctuates, that's a different story. So if you're getting volume like this and it's doing this, that's a different story, right? Then it's like you want to be more afraid, but you see it's doing this. Let's say it like breaks and then it like comes down and it pulls back a little bit and then pushes down, pulls back a little bit and it pushes down, which is really nice. So it's not that scary type of volatility where it like has these strong pullbacks. It's like gradually pushing those areas of confirmation. That's what makes it tradable. If it wasn't doing that, then it wouldn't be tradable for, especially for some trader like me. I wouldn't be able to trade that condition. It would be kind of sketchy. So yeah, I think it's pretty good over here. I don't pray for volatility. I pray for market. I can work with February. I pray for market I can work. Oh yeah, you gotta adapt. You gotta adapt. You gotta adapt because you know this could happen. This could be happening for the rest of the year, even maybe up until the summer months. It can be like this. Because for me, it was a similar situation in 2025. By March, I saw that I needed to adapt a few things if I was still gonna be in the game. If I did not allow myself to adapt to the market conditions, then it would have been a lot harder for me to get trades. Just the same way I've quickly adapted to these market conditions, so we already know like what to do, what to expect. Because it could be like this for the next up until June, July, when we get the FOMC new Fed chair put in. Let's see, I told you, it's like being a good sailor. A good sailor is gonna know these things. They're gonna be able to adapt based off of the changing conditions of the ocean, and they're gonna know what to do. Gold plunges 9% in aggressive whiplash, wiping out trillions of dollars. Wiping out trillions of dollars. Gold enters massive turbulence. Silver cracks with prices plunging. What's the entry point here? Let's see. As much as 3.5 trillion of gold's market value got washed out in a matter of hours. Big gains imply big volatility. Oh my days! What the hell is going on? Sheesh. I have never seen this before. We just dumped about like 200 pips from the open here. It is still pushing. Jeez, it's distributing. It's distributing. It's distributing. You see that range we're talking about over here? If you're locked in, you see we got resistance support right here. That big range. Oh my days! Holy! This is where I get the money gun. This is where we get the money gun. Money gun, money gun, money gun. Let's go, Goldie. Let's go, baby. Let's freaking go. 1 minute candle just dropped like fucking 800 pips. What the hell is going on? 800 pips. Holy. Insane. Insane. I ain't never seen this before. And you see it came out right that TFX confirmation right there, chat. You see this? It came out right at that TFX confirmation. Look at that. Look at that. 800 pips. 800 pips right off that TFX confirmation. Insane. I'm going to do a one-on-one class. I'm going to start one-on-one classes next week. And it's not going to be for everybody, but it's just going to be like a special type of a class to show what I basically learned. And I've learned quite a lot to what led to January gains to be like 70% with good risk management using 70%, using 1 to 2% risk. And also what I've been learning since 2025, because there's a lot of work that gets put in behind the scenes. Stream's only about like 3 hours long. There's a lot of work that gets put behind the scenes of how we expect prices to be moving, and we've been monitoring this very, very closely since 2025. And that's why I've been speaking to y'all about 2026 being a complete game changer. We made a video about that as well. And yeah, this is no joke, and it's actually all coming to fruition here. Look at that insane drop. Sells below break of the lows over here by 51.14 for price to move down. Many people are blowing accounts. Only uneducated people are blowing accounts. You would not have blown an account here using TFX confirmations. That's why the way we trade is if you get stuck in, the market should be going in that direction, because we don't trade against the market. But people who trade against the market, they're blowing accounts. These FVG traders, these Fibonacci traders, because they typically always doing the opposite too. The way their mindset is, most of the time is to do the opposite, because they're always waiting for a retracement into their levels. So even if price is pushing down, they're always thinking like, when is the next FVG where you can get that pop up, right? But with TFX concepts, we trade the direction of the market. And this is why I do that, because I've been humbled. My character has been developed to stop doing those counter trends. I remember the day I stopped it too. It was off a 4-hour Fibonacci play. It was like I was basically at the breaking point. You know, we all have breaking points before we stop trading strategies, right? It's usually we kind of remember those last few trades as we start to give up on a strategy, right? So I remember this last few trade I took because I was taking so many losses on a Fibonacci, and it was a 4-hour Fibonacci retracement. I was like, man, I can't do it another loss. So that was the last trade that I ever took that was going against markets. And I started figuring out if market is pushing down, I'm trying to Fibonacci this thing long all the time and I keep losing. I need to figure out a way that I can trade with the market. So when it pushes down, that I can push down with it. So I should have actually put this right here because that was the move, but this was the support. Got support here, got support, boom, 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 and then that distribution just came in right there by a 50, around like this is 51.15. That's when the orders got triggered in and price dumped about like 646 pips. But from the open of that 1 minute, it was about 787, basically 800 pips. 800 pips. Insane. Price is down right now about 5.46% as well. So we are just milking and heading towards our 5,000 psychological mark that we spoke about right over here when we started stream. So you see we're inching closer and closer to that daily target here. It's about like 500 pips away now. From 1,000 pips, we're just about 500 pips away now from that $5,000 mark. Damn, look at that. Look at that. Look at that. We got orders in. Boom, boom, boom. Filled up and then distributed. Paid out the traders. And that cycle just keeps repeating itself. The other orders in, boom, 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 pay out traders. Orders in, boom, 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 pay out traders. Orders in, boom, 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 pay out traders. That's literally what we've been doing. And that's what TFX Concepts is. Like, that's literally what I've been doing every single day. And it's insane. It works already pretty nice throughout 2023, 2024, 25. But I did not expect it to even work this well in such a market condition that's super, I don't know if you call it volatile, but like volume, with a lot of volume. Because, you know, with big gains comes big retracements. Never try to prove the market wrong, Jesse Livermore. Oh, yes. Exactly, Jesse Livermore. Never try to prove the market wrong. 100%. 100%. So if price is moving bullish, never try and prove it wrong. You take those same buys and execute on that movement, right? If it's moving bullish. If it's moving bearish, look for sells. Look for sells. So don't marry a bias. You see, like yesterday, we already started to notice that gold was reducing in strength. So we've already been shifting from buy, heading over down towards sells. Especially as we're heading towards the end of the week over here. Yeah, I'm going to actually, let's do this. Dun dun dun. That PNL. I saw this like yesterday when I got back from the gym. I saw a few people like comment on that drop. Then I saw a trading view. It was kind of weird. I was looking at the news. There was no news about anything that made the drop happen. So it only made sense that this is actually some kind of a pullbacks. We're seeing some interim pullbacks. Much due pullbacks from these gains we've been seeing. Because these gains have been way too much that we were not going to start to get some really strong pullbacks. Remember I mentioned yesterday the people who are going to catch the pullbacks are going to make a lot of money. Like how Warren Buffett caught the top of the stock market crash. Yeah, so the guys who caught those pullbacks, they made a lot of money yesterday. A lot of fast money. Now the question is, how many tries did they take to catch those pullbacks? But it was really due. Those pullbacks were due eventually to come in, right? Looks like we started getting it from 9:30. 9:30 a.m. yesterday's timing. Imagine you get a phone call one day and the guy's like, gold's about to drop at 9:30. Make sure you got your orders in. So insider trading. Amazing. Let's see if it respects the low at 50.47 on the 1 hour chart. It's heading down towards target here by $5,000 a troy ounce. That's going to be like a magnet now for price. I got Xauusd in the YT chat asking for advice. I watched it drop live. I was backtesting then. Just like this, like you don't even expect, but you see the volume comes in whenever there's confirmation of orders. That's why TFX confirmations are very high value areas, like a very high value area. That's typically when you're gonna see a lot of people. They're kind of gonna rush to the shelves, you know. That's how I perceive it in my mind. It's like when GTA comes out, you got people line up outside the door. And there's only a certain amount of CDs which are selling in the store. So as soon as that door opens, everybody's rushing to get all the CDs. Right? And then at some point, there's just no more CDs left. So, you know, price has already moved. So that's what that TFX confirmation is. Let me see. Xauusd in the chat. Vic, what do you think? Switch to the 1 minute instead of the 5 minute shotgun plays? Yeah, I mean, in a situation like this is like, in a sense, like a shotgun play right here. But you also have the additional confluence of the breakout. So I think in a situation like this, it would be good because at least you have the accumulation idea, which works a lot better with the 1 minute. But you can be using that as a safer way to get in. That's what Ricardo does. Ricardo usually waits, like he waits for that setup and then he waits for the candle to close like a shotgun to take it on the break to avoid any sort of pullbacks like this. So I would think that's also a pretty good idea. Only thing is, like, you know, it's like sometimes you're going to wait for it and then this happens. Then you kind of like miss it. I think it also works a lot in your favor when, let's say, the candle is about to close. Correct? So if you got like a few seconds there, the candle's about to close and you're like, oh, you know, I might as well just wait for it to close. And then that would be a very nice trade for you. They say like very nice clean ranges like this, especially on the 1 minute too. Beautiful mopping up. You see how that mopped up all the way down to support. See this here and then here, like that, and then pull back upwards. So it's like the market is it's speaking a language. Question is like, can you see that the language it's speaking? You know, are you going to stick with this concept or are you going to mix it with other concepts now? Because, you know, you kind of have to pick a side. You know, you can't be loyal on two teams. You got to pick one team, be loyal to that team. Yeah, that's how you find consistency. Like if you believe ranges get filled, ranges get filled. If you believe FVGs get rejected on ranges, FVGs get rejected on ranges. Whatever you choose, just pick that team and stick with that team. Yeah, I think it's pretty good over here. Never try to prove the market wrong. I was profitable till Tuesday. I was around 89% capital gain. Then just yesterday, I dropped down to -30, feeling so bad. Have to cancel my trip to Bali because of that. Oh, you got to manage your risk always. Never get too excited. Managing risk is super important. Don't try this at home, kids. Don't try this at home. Managing risk is super important. I'm a trained professional when it comes to tighter stops and this sort of volume over here. It's like in Jackass. You're gonna watch Steve-O do all those, or Johnny Knoxville, they do all those crazy stunts. And I think there's a new Jackass coming out soon as well. Unfortunately, Bam Margera is not gonna be in it. They kicked Bam completely out of Jackass because of his drug problem. But yeah, it's like trained professionals only. You know, you have to be very freaking confident in yourself when you're trading this kind of condition. It's the same way like a surfer, you wouldn't go surf big waves, right? I wouldn't surf a big wave. I would be like, hey, let me just leave this to this guys. Let me stay here at my level, and then slowly I'm gonna meet you guys out there. You know, just give me like 6 months. Let me just learn the ropes, slowly get myself to speed. That's kind of what's happening here in the market as well. Now we're gonna see some kind of a retracements. Get a loss at 5:45 a.m. sell shotgun play. Send in a chart. Say money doesn't buy happiness. Vic happy. But like, I'm more excited than, I'm happy to see it. I'm a lot more excited as well, you know. I'm a lot more excited because, you know, I can't, the happy thing is like, oh yeah, I'm happy, but like I've never seen the market like this before, you know. I've never seen the market like this. I mean, it's a good thing it's not like volatile. I'll say it's just volume. It's respecting structure. As you can see, it's just respecting confirmations. So if it was volatile, what would have happened instead? When this low got broken here, price would have pulled up like aggressively again before moving back down. That volatility we can't trade. You asked for 100 pips, 1 minute candle, now about 800. And it broke properly too. It was like, if you notice the way it broke, it didn't break like in a way to create slippage. It broke gradually, and then I think the volume started coming down like a bit down. I was looking at my broker. It looked like it had already broken properly, and then the volume started coming in as the candle was about to close as well. So that was also nice. That was also nice. Sometimes I see these setups on gold. Like when gold is moving like really heavy, I see my setup. It's such a beautiful setup. And then when it comes time to execute, it just goes through the level. And I'm like, shit, I can't get any orders in because everybody's taking off the CDs, taking all the CDs off the shelf. You know? And then these other times, most of the time you want to get like, you want to be able to get a CD, yeah? You get a CD, so like price will gradually break. So it's like, yeah, you know, the shelves are getting a bit light, but there's still a couple of games on there. You take the CD and then wait for it to distribute. CDs. Man, I tell you, like, if we get... What else is going to happen before GTA 6 comes out? Like, so much has already happened. So much has already happened. The world's gonna end before GTA 6 comes out at this rate. Oh, GTA 6 costs more than Aston Martin. Building that game costs more than the whole Aston Martin company. GTA 6 costs more than it costed us to go to the moon. Costs more than the Burj Khalifa building. GTA 6 costs more than a lot of things. That's a freaking video game. And it's probably not going to be sold for more than $80. If it gets sold for $100, it'll be the first time a video game has been sold for $100. But I think it's going to be like $80. They're definitely going to make back all their money within that first day it comes out. It's going to be the most sold game ever in human history when that thing drops. Yeah, chat. I'm not gonna be streaming for like 2 weeks when that game comes out. I'm gonna have to go offline, unplug, So we're gonna put all the work in right now so we can take a break off towards I think that's gonna be towards November. The game should be coming in November, so we're gonna put as much work in here as possible, maybe even take the month off. But it's a pretty good start to the year though. So I think we should be on track. Should be on track. That's how deep it is. Like literally people are already planning when they're gonna take their vacation off of work, when they're gonna take, you know, their work leave days. Oh, I missed a percent. Thank you. Thank you for looking out. Good looking, good looking. Yeah, I'm gonna add that now. Thank you, thank you. Stream the gameplay? Oh yeah, we could do that. We could definitely do that. We could stream the gameplay. Plus, we already got a channel. We already got a channel here for GTA 6 where we can share some stuff. We got a voice channel already here already. We could definitely stream the game. And, you know, we can jam with some of the members here. I think that'll be pretty fun. Apparently, you can trade in GTA 6. We're going to see. Imagine if GTA 6 is actually linked to real market conditions, like you're in the video game and price on gold is at 51.29. I remember you could trade in the older GTAs, Liberty City. I think it was Liberty City, where you could go into that cafe and like trade on the internet, or you could see the market or something. There's a guy who got early access. Yeah, it was that cancer patient. They say gold wiped out trillions of dollars. US must be in so much debt and made a bunch of money with that move. Yes. I mean, not debt. This is just a pullback. Like, you have to imagine, there's been a lot of money already been put into gold. Like, this is just, we're in the beginning of the retracement. Yeah, but it did do like trillions of dollars. I don't know why they say worth of losses. I think that's like profit taking. But this is just the initial pullbacks that we're seeing. We actually expected this to be today, but it started yesterday. Profit taking as we're heading towards the weekend now. Because, you know, on the weekend it's going to be unpredictable again with Trump. We've been getting a lot of news come out during the weekends from Friday. So you're going to see loads of profit taking. Yeah, so I think that's what it is. But let's continue reading this. The most crowded trade of the year is finally unwinding, at least partially. Gold had gone vertical on safe haven demand, dollar skepticism, and momentum chasing. Once the tape turned, stops triggered, leverage snapped, and the slide fed on itself. This comes to show that big trends attract big leverage. When prices reverse fast, forced selling accelerates losses. Volatility does not ask for permission. Whiplash mode activated. Thursday sell-offs got violent fast. Gold dropped more than $200 in minutes, flushing out over-leveraged long positions. Whips! Silver followed with a 5% slide, reminding everybody that precious metals can behave like high beta assets when sentiment flips. Early Friday trading stabilized slightly with gold hovering near 5,200 and silver around 106, but calm here is relative. That's true. Like, these candles are still huge. After a parabolic move, consolidation often becomes with sharp swings rather than neat pullbacks. That's what we just saw right now as well. Big gains, big volatility rules. Gold's massive rally this year is fueled by geopolitical stress, fiat currency doubts, and a rush into hard assets. Those drivers remain, but price always runs ahead of narrative at extremes. We have seen that happen, and we've seen it happen over and over and over and over. And you've heard me say this before. The market sometimes is ahead of reality. So let's see what's currently cooking up right now. If these are pullbacks for potential pricing in of longs, maybe we're going to have some news come out on the weekend. It's going to make the picture a bit more clearer, you know, because we're operating from a lack of information. So it's only the banks and these people, they have that information. We don't have that information. So we're going to get that information. When we get it, we're going to say, okay, this made sense with why the market was moving like this. You're going to see profit taking. We're obviously seeing profit taking, but we might even be experiencing some kind of a pricing in maybe for potential longs. So we're going to see what happens over the weekend. And then when Monday comes around, we'll see how markets are going to be. Like if we're still moving down or if we're still moving up, then we're going to see what's happening macro fundamentally and if it makes sense. Sharp corrections are how markets clear excess leverage and test conviction. Long-term bulls may survive. They will survive. Long-term bulls, late momentum chasers typically do not. That's true. Imagine the people getting in now. It's the same thing that happens to a lot of people with cryptocurrency. That's why like when crypto is like 40K, it had that run up to like 60K. I was like, guys, you're already late. This thing is about to spike up 60K, liquidity hunt you all, and come back down to like 15K. And let me show this. Like I could see this already happening because it typically happens quite a lot. Like even with gold, this is already late. I know a lot of people are trying to get into gold right now, but it's already late for gold. Like this is when a lot more people in the real world are talking a lot more about gold. But you see, we've been trading gold this whole time. So we've known and we've been seeing the opportunities. But it takes a while to assimilate into society. And that's typically when they start getting faked out. Where is that picture? It's a similar thing that happened with a BTC. I don't think it's here. I don't think it's here. Live account. Is it on live account? No. I miss MT5. Good times. This is what just happened on gold. This is a trade I took 187 weeks ago. This is a trade that I took. Was it 187 weeks ago? Oh, trying to get, what date was it? 187 weeks ago. July 1st, 2022. Was it? July 1st, 2022. And we started spreadsheet September 2023. And we started live streaming in September 2023. So this was in July 1st. This was before I was on YouTube properly. And it's the same trade that I took that just happened here on gold. The same concept. The same concept that happened here on gold. See, I've been doing this for long, Chad. I've been doing this for long. And I don't think the market is going to switch anytime soon, baby. This TFX concept. Stop playing with me. Stop playing with me. I gotta take over this industry. The only problem is I'm not showing enough Bugatti. I need to show Bugatti once. Or Lamborghini or something. But I'm going to do that when I'm done caring about teaching people. Because that's what people do. By the time you get to that point, people don't care about teaching anymore. By the time you're seeing those things, trust me, they don't care about teaching anymore. They've already raked it in. Now they're just chasing a different kind of bag. But look at this. We've been doing this for a minute. We've been doing it for a minute. We're doing it for a minute. Like market conditions haven't changed. It's like the same thing. It's the same execution. The only thing that's changed over the years is a, what do you call it? Volume. Volume is the only thing That's changed over the years. The only thing, well, we've been doing the same exact thing. See, deposit 10K. This was 144 weeks ago. Withdraw about 165. A profit 170. I got my commissions there, my balance. I don't pay swap because I don't hold trades. But yeah, that's it. Rinse and repeat, rinse and repeat. So that's why I said, like, find yourself a foundation. Find yourself a foundation and stick with it. Don't change it. Stick with it. Stick with whatever it is that you're doing that's working for you. Just stick with it and master that thing. Master that thing, like the whole inside and out of that thing and how it operates. And that's why they say devil's in the details, right? So don't be afraid to get to the details of literally everything, like even to the pip. Look at how price reacts even to the pip. Devil is in the details. It comes down to even 0.1 pip. All the way down to even 0.1 pip. You have to be able to keep refining and refining and refining and refining. You know, that's why we had a trade this week already. It almost got stopped out. Literally like 0.1 pip. Then went back in our direction. You just keep refining, 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 refining. Let's see. Price here just retrace back up. Retesting. This is 51.27, 51.28. What else? I don't think there's any setup here right now. It's just kind of pulling back upwards like a V-shaped reversal. Let's see on the 5 minute. Maybe might do a small shotgun here in a bit. This is a counter trend move though. It's like 4.60% bearish on the daily. 4 hours seems to be rejecting the support and the 50 SMA. Yeah, exactly. Nice looking, nice looking. We have 4 hour dynamic support. Because, you know, sometimes you might have some targets, but definitely those are really pesky. The 8 and the 50 SMAs are very pesky when it comes to these rejections. So always like be cautious about that too. Sometimes you're in these trades and it taps like an SMA and starts pulling back heavily. So we just had a reaction off of that 4 hour SMA. It's like right to the T. The SMAs also act as a form of like obviously like a psychological support, right? Psychological support right there. This is the 8 SMA. So the thing with the SMAs is you get kind of like momentary reactions. So it's not the same like a support when a range gets filled. You know, when a range gets filled on a support, you're expecting that like complete change, right? But with the SMAs, it's kind of like for a moment. Boom, and then pulls back up. And then continues to move down. If there's still range. If there's still room for it to continue pushing down. So it's like a small area where we have in the WAP database, we did a simulation about this. On how those SMAs can be used as profit taking, especially as, you know, price is heading, let's say the range is really big. So let's say if price comes down, the range is like really big, but you have like one SMA catching up like right here. So instead of like holding, because you know that range to hold the whole range, you're going to have to experience a lot more pullback. But if it's like chasing, sometimes just chasing towards an SMA, profit take before like the pullbacks happen. And then it like maybe fills up the range again later. Because that will be sometimes the only thing that you will see when it's like a really big range. GJ chart is messed up. Yeah, GJ. Let's see what GJ is doing. GJ is 0.27, so it's not really moving too much. It looks like it's accumulating here. Getting ready for some kind of a move, but... See GJ on the daily. GJ on daily is battling that daily SMA right there. But it looks like GJ on the daily wants to keep moving up. We got like some pretty fat rejections. You see, we never did end up closing below 210, 426 over here. So we still respected. We dipped below that level a few times, but you see GJ still respected it quite a lot. Still respect that support. And it's got like pretty nice range to keep moving up here. Like 165 points, like pips right towards like 23,800, 213,800, or 214. So I think that's where GJ should be heading. And it's also been predominantly bullish on pound yen. You can see a really nice bull run right here, creating a solid support, and it's stuck within a range. So if it's at the bottom of the range here, where's it heading to next? If we're rejecting support, the path of least resistance then will be for price to continue to move up towards that 2014 mark over there. That would be the target where pound yen's most likely going to be by the end of next week. As for Goldie's still heading down towards 5,000. You made some rejections over here. You see, you overall want to be bearish on gold, especially on a day like this, chat. Don't be a hero. Just don't be a hero. You got to follow the trend. Don't be a hero today. Don't let a buy come in your head. Because now we're down 5.50%. 5.50. Let's see if we bypass yesterday's volume. Oh, we're close. We're close. 4,000, 4,000, 4,000. Yesterday's candle was just about 5K from wick to wick. So we could even bypass yesterday's volume. And if you notice, like, if you read the news, there's nothing like that happened. That, oh, Trump said something or something happened. It's more of like, I think it's like a pullback. All that it is a pullback. Because you had a lot of gains on gold spot, so you're just seeing a lot of pullbacks. This is crazy. Look at the way it's moving right now, guys. What the hell? It looks like it wants to dump again. It looks like it wants to dump. Crazy. It can literally dump like 100 pips right now out of nowhere. There's like 27 seconds left. That's how it starts typically. It's like a gradual. You can see the volume coming. You can like almost feel that crazy dump. That's how it started here as well. Gradual push, and then you just see those little ticks. A little volatile ticks. Like the tick movement gets a bit volatile. And then all of a sudden it just like slips. Gold slides over 4% as investors take profits after a record rally. Yeah, perfect. That's why it is. It's profit taking. It's profit taking. Imagine the amount of money that, like, when you trade like institution, you know, it has such a big effect on the market. Like, look at this thing. Beautiful. Beautiful. I feel like we're sitting on top of Everest here watching the sun go down. Drinking a nice cup of hot chocolate. It's like, wow, look at these guys. You know, because the institutions, they move so much money. They have so much money that when they're going to move the market, when they're profit taking, like, it creates all this crazy volatility for us. You know, we're just but small fish in the ocean. We're just like those small fish who swim next to the whale. You know, the whale is moving, but we're just swimming next to it. And we're benefiting off that volume that the whale is giving us. So we're going to swim a bit easier, right? We're swimming a bit easier because we're next to this thing. Crazy, man. Crazy. That's why I stick to my lane. Like, I don't try to be a smart money concepts guy, because I know, like, this is a whole different ball game. That retail traders, there's no single retail trader on YouTube teaching you actual smart money. There's none. Like, they just don't do that. You rather go find yourself working in a bank somewhere. So just stick to your lane, be the small fish next to the whale. And that's how you're going to get, you know, you're going to have an easier time in the market. So when the whale is moving a certain direction, you're just on the side of it. You're just on the side of it like this. And that's how I look at it. And you're just swimming side by side with it. Follow the market. That's the whole idea behind TetraFX concepts. Following the market. If it's breaking lows, we're breaking lows. If breaking highs, we're breaking highs. Selling, we're selling. Buying, we're buying. I don't question it. This morning I saw 3%. Okay, boss. We're selling today. Tomorrow, it's going to say maybe 2%. I'm going to say, okay, boss, we're buying today. Aye, aye, captain. Don't try and outsmart the market, chat. You're going to get whips. So if you're still looking for buys over here, man, you got to stop trading. You got to close the C trader or your terminal and call it a day. Call it a day. If you're still looking for a buy right now, just call it a day. Yeah, exactly. Just like this. We got the shark and you got the small fish there. You see that little fish? This is us. This is all retail traders. Even ICT is here. Even ICT is this guy. ICT is this guy. TJR is this guy. Who else? Traders Paradise is this guy. We're all just this guy over here. And then this is the market. Right, this is the market. So market says we're going up. You say, okay, boss. You see, if this shark changes direction and starts to go down, we also going to change our direction and we're going to start going down with it. And that's the best advice you're ever going to get in your trading journey. Is to not outsmart the market, is to trade with the market. That is the best advice you're ever going to get. That the best advice that I can ever give anybody, because it's going to save you from blown accounts. It's going to save you from crazy drawdowns. You know, the reason why a lot of like these great traders find themselves in these massive drawdowns is because they're always going to try and outsmart the market. It even happens on, it can even happen on an institutional level. You know, if you're not careful, like Michael Burry tried to outsmart the market, the housing market. His account almost blew. Remember in the movie, The Big Short? Man's account was almost blowing. He was trying to outsmart the market, but thank God it went back in his direction, right? But there was still a lot of emotional damage. Look at this, 5,000. You see 5,000? I told you $5,000 psychological mark. There's just some retracements for continuation to the downside. It's coming for 5K. It's like an institutional mark.
Why are you running?
Let's run, Goldie.
Why are you running? Why are you running?
5K, baby. Can we see 5K? All right. See, we have about like 50, 23, 50, 23. Can we see 50, 50, 15? Can we see 50, 15? Do I hear 50, 15? We have 50, 15. Do I hear 50, 15? Who wants 50, 15? We got gold shorts here at 50, 15. Come on, 50, 15. We're heading down to 5. Once 50, 15. 50, 15. 50, 15. Almost. See, we got about 50, 20. 50, 20. Anybody left here? 50, 15. We're heading down to 5K. All right, we got 50, 15. Got 50, 15. Anybody want 50, 10? Got 50, 10. We're heading down 5K. Yeah, man, 5K. Man, I love this game, bro. Fucking love it. I think some people are just born to do this. It's not, trading is not for everybody. Like the type of stress that comes with it, it will either make or break you. And it almost broke me. It truly almost broke me. It almost broke me. That's why the point in trading where it didn't break me was the point where I submitted. I submitted to the fact that I didn't know what I was really doing. So I started waking up each morning expecting a loss, expecting a lesson. A loss, a lesson, a loss, a lesson. So I shifted my psychology completely to accepting that I'm going to wake up today and lose. But I'm going to learn something from that loss. And once I started thinking that way, I kind of outsmarted the market because I was like, oh, you gave me a loss? Thank you. You know, this is not going to play with my emotions. I expected you to give me the loss. You know, it's like a reverse psychology. And then you just start taking it easy from that point. And you start to see other people blowing accounts. And it makes you feel more that you're on the right path because you're not blowing an account. I had like a $400, $500 account during COVID. I never blew that account. My biggest losses were maybe 5-6%. You know, my biggest losses were not detrimental to me. My biggest losses actually came from ego and wanting to rush the process. So I would every now and then try and risk a bit more to try and make back money. And then it would humble me quickly. And then I would go back to risking like 0.5%, 1%. At one point, I was risking only 0.5%. And I couldn't even get beyond 0.5%. Am I 0.5%? I was reducing my risk as much as possible. Because I was also adding capital. So it'd be like $500. And then I would put my salary into it, get like $600. And then put my salary into it. I put like $1,000. But I would always just risk like 0.5%. Because I knew if I could be profitable, even just risking 0.5%, There's no reason I'm not going to be profitable when I risk whatever amount. I just needed to see the greens. I just needed to prove to myself first that I can be consistent. Hey, Extremer. So it looks like we peaked here at about 50.13. So it looks like 50.15 was the last grab over here. Getting really close to 5k. You just need to push about 137 more pips. Yeah, so this again was the idea of today's trade right over here. See this? We were waiting. So we send this out and we're like, all right, you know, price is bearish right now. And if we break below 51.74, stop loss 51.76, and price can move through that level. It can just move through that level. So you can see here 51.74. It ended up coming down, triggering that position, and just completely melted. See this? Came down, triggered us in, just melted through that level. I was like, man, this thing is coming down. It's coming down towards support. Gotta fill that range. It's gotta fill that range. It's gotta fill that range. Now that's why I secured right here. Obviously, I don't want to be greedy. I wouldn't hold the whole range. But you just take a slice of the cake and then you just keep it moving. Right over here, you take a slice of the cake and you keep it moving. They got this guy from Neil deGrasse Tyson's show. I think he's a comedian. Yeah, it's the same thing like yesterday, chat. Remember on yesterday's stream we spoke about the sells? Right here below 5,500. About 5,500. Market broke below 5,500. Breaking those key wicks right over there. Fill the range. Simple. Same exact thing. Same exact thing. TFX concepts, man. You can't get lucky in trading. Let me tell you one thing. You don't get lucky in trading. You don't get lucky in trading. Trading is all about your edge. What is your edge? What is your strategy? Can you see that replicated? Is it something that happens daily? And if the answer to those questions are yes, then stick with that system. Stick with that system. Master that system. Get really good at understanding, fully conceptualizing that system. Bro, I made $700 profit on a $100 account. Have any suggestions how I could keep it from getting blown? Withdraw profit. Would leave the account at like, I would say withdraw like $200. Leave the account at $500. And then trade that $500 account to survive. Don't trade it anymore for profit. Trade it to survive. So that's going to be your tokens. If you run out of tokens, you can't play anymore. You can't play anymore. Then how are you going to ever become a successful trader if you can't even play the game? You know, so keep that $500 account. Be consistent with it. Reduce your risk to like 1%. And then see your results after 25 days to start with. That's what Mark Douglas says. 25 trades will give you a good idea of how your system actually should perform. Risking 1 or 2 trades a day, see how you perform in 25 days. And trust me, if your performance was shit, FX Vic Mensa just saved you from blowing that account. If your performance is good, awesome. You still don't lose anything. You're still in a win-win situation either way. So now try and do that again for the next month. And then imposter syndrome should end by the first quarter. Your first quarter being profitable, imposter syndrome should end, and you should feel a lot more confident about what you're doing. And then at that point, now we can start talking about funding challenges. We can start talking about scaling and increasing risk and that sort of thing. And make sure you're collecting all that data as well as you're doing it. So don't do it just in your head. Make sure you're recording everything. That's the best advice I'll do. Now with that $200, withdraw that money and go treat yourself. Buy something for yourself as a reward, but don't over risk that account. You're going to lose it. 100%, I can guarantee you, Dark Start, YT, I can 100% guarantee you, I put money on this, you're gonna lose it. If you don't have the right education, you're 100% gonna lose it. So keep that 500, treat it properly, and reward yourself with a 200. That's the best advice I can give you. Best advice. So we're going to see if you listen to that advice in a month from now. I'll give you like a month time span. We'll see if you can actually want to focus more on a skill than chasing the money. Because if you're focusing on the skill, then the money will come. If you're chasing the money still, it's going to run away from you again. That's the honest God's truth advice I can give you. I'm not going to tell you to withdraw it and then try funding challenges. You know, that's how other people are going to tell you to do. But you're not going to be profitable on a funding challenge if you can't even control and manage a $500 account. How are you going to manage a 50K account? The same mentality I have right now. I'm trading 0.01 for the last year. I still have the same account I saw with, and I've been trading for 1.5 years. I've ended 2 months now profitable. Once I can show myself a year's worth of consistency of profitability, there's no reason why I shouldn't be profitable 1-2% onwards, 100%. There's no reason why. You know, there's no reason why. If you can be profitable, there's no reason why if you increase your risk, then you can be profitable, especially just 1 or 2%. It's not a lot of risk. So your psychology will still be on track. It's different if now you get too comfortable and you start risking 5 or 10%. Now that's a different story, because the way you're going to trade on a 5-10% risk, it's going to be a whole lot different from that 1 or 2%. 1 or 2% still keeps your head on straight. So I think, yeah, it's pretty good. It's very important. See, we should be coming down to 5K over here. I think these are some further retracements, a little consolidation breakout to the downside. A little accumulation break to the downside over there. These moves look really small, but they're quite big. That's already about like 80 pips. Zero drawdown as well. 16 pips stop loss would have survived that. And 20 pips, 16 pips stop loss. They would have both survived this move right here. See, it's a high value area that is. As it's coming down, especially as it's close towards like that $5,000 mark, you can see that it's a potential magnet here, and the setup is happening close to 5K. Right? This is a place where there's a bit of structure. Price just peaked about 100 pips. Imagine that, like, chat. Like, just that one move right there is like 100 pips already. 16 pips stop loss still being respected. It's a complete nut. On dump it. Can we see $5,000 Troy ounce today? I think we can see that amount today. I almost blew an account yesterday, but I managed the risk. Nice one, Eisen. And Eisen, you're starting at a very early age, so you're gonna be already an amazing trader by the time that you are my age. If you said you were like 15, 16, awesome. You know, the good thing about your generation is your generation has so much access to knowledge. My generation, we didn't have so much of, like, you know, the internet wasn't what it was today. Right? It was not what it was today. So it was more lack of information. Now the information is there. There's no excuse. There's so much information. There's so many kids your age doing it, and you see it online. Vic here talking like an old man. Is that gold just having a few more pullbacks or potentially heading back down, it's accumulating again, setting up some possible accumulation there. I think it's gonna blow through 5k if that's the case. If it's already doing this right next to 5k, it's probably gonna blow through it. That's why I was trying to measure out the previous daily candle here to see how how much further it can go down. As you can see, we still have from that wick break right there, we still have around 500 pips. Yeah, about like 500 more pips. If it re-breaks that daily lows, those daily lows right there, yeah, like 500 more pips. So I think that's what it's setting up for. That's what I'm hoping for. Looking for a quick scalp to end of the week and call it a day. It'll need to break through at least 50-12 there to keep going down though. And the 5 minute just created like a resistance. You got a resistance point here, but obviously taking any buy on gold is like suicide right now. Because the moment you get a buy confirmation and the moment it starts to go against you, it's curtains. At least until you start to see a little bullish pressure come in. Like distributes from here. And then you can see a few more pullbacks to the upside such as these. But that would be the inception. If that actually plays out like a buy, that would be the first buy signal. But it's also would be the riskiest. Because it could easily just liquidity grab like this, pull down aggressively, and next candlestick continues the bearish momentum like that. And then you got to look at that in hindsight, then that becomes a fake out right above here to continue moving down to 5k. I want to pull down. It's only like the sellers are waiting to come back in. When they come back in, you're going to see that influx of sell orders kicking up again. Just waiting to come back in. They're at a point A right now. So for them, this like think of the mind of the market right now. All right, so this mind of the market is thinking to itself like, hey, you know, we're inside this little bubble here. We're not yet moved anywhere. So now imagine the mind of the market when it starts to like break some key lows, or when it starts to break some key highs. Like what the market's gonna be thinking. If it starts breaking like key lows, even just if there's no structure, then there's price points. If it starts breaking below like 50.12, because we peaked 50.12, 50.13.40 since the London Open. Now imagine like price since the London Open starts dipping below 50.13.40 over there. It'll show that it keeps moving down bearish, right? It'll show that it keep moving down bearish. It's a similar thing like when you see those traders in the pits. Those traders in the pits don't have like they didn't have real-time data like this back in the days. So that were based like off the psychological marks in the market here and how price is pushing beyond certain key points. Because back in the days, you wouldn't have like a screen of like charts on your phone and you could see the chart work. So I think like interpreting the market also required a different sort of like skill set. And that's still what we kind of like to incorporate today as well. Alongside obviously our structure and confirmations. And you can see once it start breaking below those lows, then we can see price in the market will be thinking we're creating new lower lows since the London Open there. And that's going to be the daily break as well. The market's all going to be thinking it's breaking the daily wick lows. So that means that selling momentum is still in. And it should actually kick further in once it start re-breaking the daily lows. Like volume should start coming back in again. So right now, for now, it's just like stuck within this zone. Just getting ready to set up. It's like a 50-50 area in my opinion. That it can do either one thing. Either it's gonna go up bullish 50-50, or it's gonna come down 50-50. So you just have to wait. We just have to wait and see. I could bet you that we will not revisit the 5K today. There's a higher probability it will revisit that 5K today than it won't. We're pretty close to it right now. You'd rather, if your life depended on it, you'd rather bet that we'd revisit 5K. Like probability wise speaking, why wouldn't we? Been moving down so much like that. Gold is like the roulette table, which just keeps landing on red. Sometimes you go to a casino and you're gonna see that roulette always on red. Red. Then it's only that you kind of come with your mentality that surely the next one can't be red. We should get a green in there somewhere. And then to your surprise, you start to see roulette table just sticks on red. Yeah, it just keeps going red. So whenever you see a roulette table like always on red, I would say just go with the trend. Just go with the reds. Go with the reds. Right? Trying to win what's never been won, man. That's what Bob Dylan says. That lyric always stuck with me. Everybody in this world is just trying to win what's never been won. Everyone's just trying to get lucky. You don't have to get lucky. You don't have to reinvent the wheel to be successful. You know how many people failed? How many failures there were for each Steve Jobs? How many people failed to be a pioneer for each Steve Jobs? Compared to how many people succeeded to copy what Steve Jobs did. You're going to succeed more copying people who are successful. You're going to fail. The probability of failing is so much higher being a pioneer. So that also is reflective on the market. There's price coming down, you're trying to pioneer the moves up. You know? How many people have failed trying to catch this bullish price action on gold today? Mind you, gold is down 6.40%. How many pioneers have gotten away with any bullishness? So that's what I mean. I also didn't reinvent the wheel. I stick with what's working and what has been around for ages. Even before I was born, this strategy was still operating. Even before the universe thought of conceiving me, the strategy was still in operation. Right? So you never reinvent the wheel. It's a lot harder being a pioneer. Silver down 13. It's like slowly creeping its way up to like 5K over there. As soon as it goes through like 50, 13, 44, I'd be expecting this thing to melt even beyond that 5K mark. That's going to be the re-break of the daily. It's probably just going to melt. So I'll be anticipating. Selling orders should come in. Sell orders should be coming in there. Yeah, people getting sells there. That's typically what I would imagine. So we're getting into sells right there as well. As starting to re-break those daily lows. Pretty close to 5K now. Pretty close. Coming out at 5K. Can we see 5,000? 5,000 right here. Can we see $5,000, Goldie? Can we see $5,000? $5,000 going once. Going twice. We got 5K here at 134 pips. Weighing in at 134 pips. We got the TFX sell-off down to 5,000 psychological mark, baby. Come on now. Stop playing with me. Stop playing with me. Simple. So again, that's the move. That's the move you're looking for there. Jerinix. JTR. JTR. That's it. That's it. Call it a day. If you're gonna secure 80%, you're gonna secure 80%. And then just let the rest of the trade go. If you did not execute on this trade, call it a day. Just call it a day, because it means that you're not in the right headspace to take any trades today. Because now price is down 7.11%. Where if you still have not taken any trades, even the ones that we called out all the way up over here, call it a day. Call it a day. You're not in the right headspace. You got to leave the office. If this was like a hedge fund, man, I'll tell you, just leave the office. You're not in the right headspace to take any trades today. Because a trader is only as good as their ability to execute. You can't execute, go home. Go home, come back tomorrow. Because now you're going to do some dumb shit. Uh, 374 pips. And you're like, if we were accumulating right next to 5K, we're most likely blowing through it. That's why we didn't come close to it there. That's how we pulled up like right here before hitting it. If we're going to pull up and do this, most likely getting enough orders so we can properly blow through $5,000 a troy ounce. Man, what an amazing freaking January this has been. Amazing freaking January. Like, this is literally how all our trades have been playing out. All our trades. And there's no reason it should stop now. I think we're going to monitor February very, very closely. We'll see how February there is going to be performing. And we'll continue to slaughter markets like we do. We'll continue to follow our plan like we do. Nothing's going to change until the market changes. And then we're going to change with it. But we don't have to reinvent the wheel. We don't have to overcomplicate anything. We must just keep executing. That's it. Show up every day. Same process. Same process. Same process, come on. Now you see it's in a distribution phase. So this is now when people are going to be looking for sells. They're going to ask me buy or sell right here. When we spoke about this, they're going to ask buy or sell right here. But this is in a distribution process now. It's paying, you know, they say like fortune favors the bold. It's paying the bold their fortunes now. So now if you got to wait, you got to wait for more. You got to wait for more structure. Here, you gotta wait for the next bus stop. So this just peaked at about a 613 pips. Imagine that, just in a matter of 1, 2, 3, 4 minutes. In 4 minutes, we've done a daily gold average candle. On a normal year, we've done a whole daily candle on gold in 4 minutes. Like, come on. Just let that sink in. Let that sink in. And this is insane. Average daily candle, like in 2013, 2023, 24, in literally 4 minutes. Zero drawdown. 16 pip stop loss, no problem. Like still zero drawdown through that level. Can you share your spreadsheet and quick analysis of the trade today? Yeah, the trade today was more or less the same idea. We're just waiting for the same thing I just waited with you guys on stream right now is what we did with today's sell this morning. Same exact thing. Same exact. People think I'm lucky. I'm not lucky, man. I'm just very consistent. It's the same thing I just sat you through right now is what we took this morning right over here. Right there. You see this? The only difference is we didn't have range. But this is the thing with trading. It's a very visual. So the more iterations you get of this, the more it starts to click. Like, and that's why it's important for you to send in chart work, because through your chart work, especially if you're in the mentorship, through that chart work, I can truly see if you're understanding what's going on. I can see it. If you don't send me chart work, I will never be able to know where you currently are. Like I know, like Gbpjpy, for example, since he's been sending a lot of chart work in confluence with sort of the way we trade, then I can see that this guy is very much onto something. And also based off the trades that he's been taking, he's actually been executing these really, really nice TFX entry trades. And I can just see it. But if you're just going to speak, I don't know. You can only get better through, let's see, January plus 20%, 2026. Oh, January 2025 and minus 72%. January 2026 plus 20.4%. Learn some lessons this month with that losing streak. TFX concepts. Let's go. You see, if you send the chart work in, if you put the work in, that's what you get. You're gonna at least see some kind of an improvement there. Let's see, gotta zoom in. Got lots of the accumulation breaks. Very nice journaling here. Boom, boom, boom. This is... Got a shotgun. Where are you posting this? Do you have a Discord? I don't know where that link goes to. One trade, 2, 3 trades, 2, 2, 1, 2, 2. Amazing. This is exactly how you want to do it. 1, 2, 1, 2. Perfect. So this whole month you stuck to 1 to 3 trades. Mainly on average like 1 to 2 trades. Right? And then you're able to consistently manage that emotion. Sticking to just 1 or 2 trades. You can see your wins over here like 2%, because your wins are going to show like the emotion now. 2%, losses 1.42, loss 1.46, loss 1%, 1% loss 1.20. It's a really good management on those losses. And you got some few bumper clots here. 6.20%, a 2%, 3% win. Amazing. Gold is likely to sell up to 48.61 level. 48.61. Let's see. Currently, we just blown through 5K. We just peaked about 700 pips. 700 pips from that entry model. We're at 49.41. 49.50. Yeah, 49.50. But I think we're pretty close to yesterday's volume now at this point. Let me see. Yesterday's candlestick here, this was about close to 5K. Man, we've just done more volume than we did yesterday. Yesterday, everyone was surprised how much gold moved. Today, we've done more than what we did yesterday. And the thing is, we're still quite early. I've never freaking seen gold like 7.30%. It peaked here at about 8.12. I've never seen gold hit like 8.12% like this. And there's still a lot more room in the day left to even see a potential 10%, to be honest. Like since our market opened, I would not be surprised. 10%, that's like 40.83, 48.50-ish. Next target's by 4,900. Since yesterday, your stop loss so big because of volume. Insane. Market watch. Gold falls as expectations of wash to Fed hits the dollar debasement trade. The brakes are being pumped on the breathless rally for gold and other precious metals. Friday, amid rising expectations, Kevin Walsh will be nominated to be the next Federal Reserve. Oh, rising expectations that Kevin Walsh will be nominated for the next Federal Reserve chair. Gold saw selling earlier in the session after pushing above 5,500 record, recovered, then selling rebooted later in the day. Thursday was marked by a volatile day across markets, while with tech under pressure but also soaring copper prices. The dollar was gaining along with treasury yields. See, gold priced in the US dollar, so it tends to move in the opposite direction as the US currency. The move away from the dollar debasement trade, which was previously showing signs of becoming entrenched, was something of a surprise to investors who have been actively seeking haven alternatives. Let's see, Walsh has been among the most market-friendly candidates, as he is a former Fed governor with a history of hawkish views, especially on a balance sheet reduction. Hawkish views? Interesting. So that would be hawkish views, then that would be more of like rate hikes. More hawkish on the dollar, which would mean more bearish gold. Given how adamant Trump has been on reducing rates, it's safe to assume that Walsh has taken a more dovish stance. Now that's the thing, during the interview process. But this pick may suggest a desire to calm speculation on Fed independence loss. That's true. That's true, man. Like it's interesting because this guy is pro hikes. He would be mostly pro hikes. He's more hawkish on the dollar. But now because Trump is kind of cherry picking here, that could put him to be more dovish in the sense that he could be bought off. Anyone can be bought off. Give you a nice briefcase. And the thing is, but at the same time, you see how the market is paradoxical. At the same time, it calms speculation on Fed independence. Because this guy would be most, if he remains true to his character, then if he doesn't sell out, then he should be like a Powell, who takes a long time before even considering any rate cuts. Because I would argue that Powell is more even hawkish as well. Powell is not really dovish on the dollar. Price action over the next few days will be key. But you know, that's how it is. It's a lot of like rubbing shoulders. Like even with hedge funds, it's not always about trading. Like fine, you're gonna trade. It's all electronic anyway at a fund. but there's a lot of rubbing shoulders with people. You know, you still gotta meet clients face to face. You still, you know, gotta take them out to dinner. You gotta explain. Basically, people who work at a hedge fund are salesmen. People who work at a hedge fund, they're just salespeople, right? They're salespeople with the skill to also trade, but majority of it is just like sales, because you're trying to get clients on board. You're trying to get money into the fund. So you gotta like rub shoulders with people. You gotta try to convince them about certain plays, etc., etc. So that is still a reality of the business. As much as it's all done electronically, it's still a reality of what goes on. So there's no difference here from Walsh becoming the new Fed chair. It's gonna be rubbing shoulders with the old white men in the White House who want something from him, and they're willing to give him a lot of money for it. And he's only human at the end of the day. You know, he's only human. Powell is also not perfect. I'm sure Powell has done a few corrupt things in his time in the Federal Reserve. He's not perfect. So we'll have to wait and see how this all plays out. Price action over the next few days will be key. Naturally, $50,000 troy ounce in gold and $100 an ounce in silver stand as key lines in the sand. Bluntly, the two moving sideways and becoming rather boring for a few days would probably be the most constructive signal that the market could offer right now. Well said, Michael Brown. I mean, it would be the most constructive, right? Constructive, create like a foundation. You even see the wordplay right there. Constructive. What do we say whenever we take TFX entries? We're waiting for a foundation to first build. When that foundation builds and breaks out, we have a concrete foundation to back our trade up. So then when Michael Brown's putting it here, it's like it would be constructive for the overall market to move sideways than just to be volatile like this, which I understand, generally speaking. But as us traders, we like that volatility. But even when it's going to be constructively moving sideways, there will still be volume enough for us day traders on the intraday timeframes, which is a good thing. So the market can move sideways, but it's going to move sideways with volume. And we're still going to be able to trade. So I don't have a problem with that. Let's see. Read. Investors aren't scared of record gold and silver prices. Wall Street's price targets are struggling to keep up. Yeah, that's true. Like, I'm struggling to keep up. Like, man, I wake up in the morning, it's a pre-London session and prices are up like 3%. Crazy. Like, imagine what Wall Street feels. How does Wall Street feel about this? How does Wall Street feel at the New York session open when gold has already moved 7%? You know, all the meat is coming in during the Asia and the London session. The Asia throughout London. By the time New York session opens, most of the volume in the day, all that money has already been moving around. So they've already missed out on a huge chunk of money by the time that New York session opens up. And you see, that is your edge as a retail trader. You don't have to act like you're a Wall Street trader. You don't have to pretend like, oh, because ICT guys trade NQ and they trade the New York session. I got to trade NQ, US 100, New York session. Like, you don't, your edge as a retail traders, you don't have to do that. Like, if you see market moving during the Asia, during the London, you could trade those sessions if you want to trade those sessions. Because it's been literally moving this whole week, this whole month. Asia has just been pushing straight bullish. Like, even since the previous, pretty much the whole month. See, don't bottom weeks. Push, 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 push. So if we're going into February now and you feel like you've missed out on a lot of opportunities, it's all about preemptive warfare. So just get ready for February. You can't play the victim in February again. If you've noticed you've been missing on a lot of opportunities during the pre-sessions, you might just have to find a way to key yourself in earlier on. So at least you can be part of those moves earlier on, because it could happen in February again that we see a lot of bull runs. But we'll wait either way. I come in personally during the pre-London time, which is for me still early enough. Because, you know, Asia is the first session of the day anyway, and if Asia completely moves, then it is what it is. But that pre-London session is a second session of the day, so it's still pretty fresh in any case, irregardless. And then we have the London session open, which you can see still provides quite a lot of nice moves too. So you can see here, since our London open right here, price has dropped an additional 2,400 pips. Now we're heading kind of like towards the tail end of these moves, I guess, unless price retraces up heavily first, and then that provides New York session some structure again to come down. But as it comes down, we're definitely heading towards some kind of a tail end. I mean, because price has already peaked from the open about like 8%. And just based off of like an average true range, this is well beyond what an average true range can already look like. If you even compare like all these other candles here from the past, you can see that average true range. You haven't had that like chat, we haven't had that at all. Look at these, look at the difference in size. These are daily candlesticks here from this is January 2025. So this is how the year started, and this is worth price action for a whole month. Actually, a whole quarter. We've done a whole quarter of volume in one day. A whole quarter of volume in one day. Let that sink in. A whole quarter of volume in one day. Insane. Can't remember the last time we had a candle like this. Look at this. We're gonna have to keep going so far back to even see a candle that big. Unbelievable. Unbelievable. My best month yet. 70% over here. And hopefully that price can keep doing this into February and the rest of the year up until the new Fed chair is put in. I believe that should be in June, July, right? And then we'll see. But yeah, I think it's going to be a pretty good year. Pretty damn good year this is going to be. But it's not a normal condition, right? So you got to like really take advantage. Because if you blink, you might miss it. I would be looking for a buy right now if I was trading gold. If you can't understand PA in London or Asia, you can't trade PA in NY because price moves the same everywhere. Yes, price moves the same everywhere anyway. Only difference is the type of volume that will be provided to you. You know, the kind of volume, like it moves slightly differently. Like it's sometimes a directional thing. You gotta pay attention to direction to increase probability of winners. Because sometimes during the pre-sessions, you're gonna have a better chance going with direction. And then throughout the London, you really want to see a trending market by the time London opens to give you more confidence that price can keep moving. Because there's no normal market conditions. In normal market conditions, that London session can tend to not really go anywhere. But if there's volume and you see price already up like 0.40% plus, there's a high chance London can keep pushing. But if London opens and the daily is like 0.20%, there's a high chance London's just going to consolidate. Vic, you're one of the smartest traders I've seen ever. Thank you, sir, for your time. Thank you, John. But I think I'm just making things very simple. That's all that it is. You know, smartness, there's levels to smartness. Like, I don't even consider myself smart at all. Maybe I have a general smartness, but man, there's some people, you got to talk to some people. They're just incredibly smart. Definitely levels to that. But I'm smart enough to get the job done. And sometimes that's all that you need to be, right? You just need to be smart enough to get the job done. But thank you, John, man. I appreciate it. NY leftovers since it is also the end of the month. Yes. End of the month over here too. JP Morgan making a case for $8,500 price on gold is almost guarantees we go there. You shouldn't be thinking of any buys unless you want to be my liquidity. Can almost guarantee next Fed chair is he or she will be arrested within a year. If it's going to be blatantly obvious, then yes, I do believe something can happen. Like, I don't know how re-elections work with the Fed chair, if that's even a thing. But imagine you get this new guy in, and the first thing he does is rate cuts. That's already going to start sending red flags throughout the market. we're already gonna start thinking that Trump is manipulating the Federal Reserves, and that's really gonna affect a lot of things. So, you know, it's like it's not gonna look good for Trump. Like even if he puts this guy who's pro rate cuts in, I don't think that's gonna look good for him overall in the market. And then he would rather just hold it off till the year, end of the year. At least give us the illusion that there's some kind of a control over there, beyond politics. But I can see with the dollar here, it's still definitely holding 96. So it's even pulling up. DXY is bullish on the daily, 0.50%. So it might be true. Maybe this guy gonna get put in. He's gonna be more hawkish. Gold, dollar is not gonna tumble. Gold is not gonna skyrocket as much anymore. And we're gonna slowly start to go back to some kind of overall control. That's one scenario. The other scenario is a lot more interesting. The other scenario can keep 2026 a whole lot more interesting. Guy comes in, rate cuts in July, gold skyrockets, the world goes into a frenzy. Donald Trump has taken over. The Federal Reserves are going to be the headlines. There's no more independence in the Federal Reserves. The markets are going to be all wacky at that point. Trump's going to make a shitload of money. His friends are going to make a shitload of money. Day traders are going to make a shitload of money. But the overall economy is going to be in a spiral at that point. De-dollarization is going to increase as well. That's going to very much increase, more than it is now, because we're truly moving away from the US dollar, which is being corrupted by Trump. And at that point, God knows what happens next, right? God knows what happens next. But irregardless, we still have to do what we do as traders, whether we like Trump or not. We're still going to sell gold if it moves down, or we're going to buy gold if it moves up. Gold will likely reach $6,200 an ounce in the first 9 months of the year before moderating to $5,900 an ounce by the end of 2026. UBS analyst. This is the Dow Jones wire. So it's looking at gold will most likely reach $6,200 an ounce. I think if we reach $6,200 an ounce, we're probably going to do better than 2025 then at that point. We break a new record. But let's see, UBS projects an upside scenario target to 7,200. And you said, JP Morgan makes a case for 8,500. JP Morgan making a case for 8,500. We're looking at a potential 7,200 here as well. A hawkish pivot by the Fed could heighten the risks to the downside. That's Kevin Walsh. That's where Kevin Walsh comes in now. While the steep escalation in geopolitical tensions could bring it closer to the upside scenario. Escalation geopolitical. Now that's what's happening with military and Iran. The military moving into Iran right now. UBS continues to rate gold as an attractive and maintains a long position in its global asset allocation. It's a pretty calm 7,200, I would say. I would rather go with 7,200 than 8,000. It's always better to underanalyze, right? And 7,200 is like all the way up over here. Sheesh, that's a lot of upside to still see on gold spot. I'm just retesting 5K psychological. See if 5K actually holds properly and we get the next daily candles into the new week. Respect $5,000 and then continue to rally back upwards to like 5,600. I think that would be the ideal situation, right? Like we respect the psychological mark of 5K because that's a quite important barrier over there. $5,000. It's already pushed. It's already pushed enough in my opinion. Damn, we're looking at 7,000 even. Because my initial analysis was gold up to, I said what, 6K? Around like 6K I think it was. That's why I said the upper end's at like around 6K right here. But we got these guys anticipating prices going up to like 7K. And beyond. Because even if we get a 6K, that's still freaking amazing. 6K is like right here. Let's see, Jan. Yeah, 6K. Okay, no, 6K we wouldn't bypass last year's volume. We have to like 6250. At least we have to break 6250. If we can even get ourselves up to 6500. Actually, let me change that target, 6500. Then that would be awesome. We can re-break last year's records as we head on upwards to 7K and beyond. But the chances we do that, I don't know. It seems a bit too ambitious. But I don't know. I think there must be a lot of instability that's been planned or been seen on the horizon for them to even suggest 7K. Like, that's insane. That means the market's about to experience a serious shock if we're already even talking about 7K to 8K. If last year was the best record year on gold since 1979, and now we're expecting to do a lot further than that, almost double. If we're looking at 8,000, that's truly what JP Morgan talking about. That's almost double. Then I think, you know, this is going to be insane. Whatever's happening in politics wise, and how the economy is going to be affected, it's not looking too good. But it's looking amazing for gold and day traders. Gold to 10,000. Hey, wildfire. Screw 8K. Let's go 10K. 10K. We'll see 10K in 2027. $10K. Imagine if we get to 10K, this is how much gold do you think you will even have? Like, look at this. Look at this video over here. Let me see. This is 100,000 euros worth of gold in 2006. Let's go full screen. That is 100,000 euros worth of gold in 2006. And this is worth 100,000 euro worth in gold in 2026. Now, if we get to 10,000, how small will that pile look? You know what I mean? This is gonna be like Pirates of the Caribbean when they find David Jones' chest over here, and you're gonna find like so much gold. And now imagine this. This is 4.9 kg in 2006, 100 euros, 100,000 euro, and this is 0.8 kg in 2006. It's 2026. 0.8, 4.9 to 0.8. Make sure you follow me on Instagram. I post a lot of good things over there. If it's 5K now, then the pile would be half at 10K. Yeah, the pile will be half of this, right? So that'll be about 0.4 kg. And that feels so little now. But it's a nice storage of wealth, right? So instead of having like so much cash, let's go have like storage of wealth. Because cash is actually useless. You're gonna have a lot of cash, but you can't do anything with just having cash. They actually say Mr. Beast is worth $2.6 billion, but apparently in an interview, Mr. Beast says he doesn't even have enough money in his bank account to buy a McDonald's. You're gonna have so much money, even if you put it in a bank account, you can never access or truly access that amount of money. You know? So what can you do with that money? You gotta spend it. You gotta somehow spend it. Mr. Beast's video, he spends almost all that money, the money he makes, he reinvests it into his videos. Have you seen his videos? Quite expensive. He gives away like $1 million, like nothing. We had Alex Honnold just free climb, free solo a whole freaking building, and Netflix only paid him $500,000. Imagine Netflix bought Warner Brothers. For how much was that they bought Warner Brothers? Let me Google this quickly. Netflix bought Warner Brothers for $82.7 billion. And they paid Alex Honnold $500,000 to climb and free solo that thing. Basically to risk his life to climb that building. And Mr. Beast easily gives people like millions of dollars just on those YouTube videos. He should have climbed the building on a... He should have fucking done that on Mr. Beast's channel. At least he would have made a few $1 million. Netflix just completely stole from that guy. But anyway, I'm pretty sure Alex Honnold doesn't even do it for the money. So for him, maybe he doesn't care as much, but definitely got robbed. Bitcoin is not the hottest girl in the room anymore. No sirree. And we've been knowing this for a long time, you know, fuck crypto. Like crypto and NFTs, it's not a real thing. It's all fugazi. And it looks like also crypto should be on its way down here. Yeah, we're just about cracking that accumulation phase on crypto, so this thing should be on its way down. Especially once we get through that wick there. Start breaking $80 down towards $60, 60k. Once we break 80k, we should be heading down towards 60k. So you see crypto here did like that little liquidity grab. It actually did, crypto actually did a liquidity grab over here. It actually did that liquidity grab scenario above like 96,900. Liquidity grab, people, you can see that on the weekly and monthly actually. You can see it better on the monthly. Look at that liquidity grab on crypto above 96,900. And this thing is coming down now. It's just triggered in positions here. It's getting the exuberance in. You know, because think about people who have been struggling in crypto, who've just been waiting. You know, you wait for so long, then the market gives you a signal and you rush into it. It sticks you in, and then it goes in the opposite direction. So you're going to experience this on a day-to-day basis. It also happens on a higher scale, like even as high as a monthly time frame. Because people have been squeezed here on crypto, wanting this thing to rally. They get that last push of exuberance, and then the market cleans them out. Like this, boom. Because you see, there's no reason why crypto should move up fundamentally, so it's not going to move up. Metal Mania. Up to you if you time out this freedom of speech. I think you got timed out because maybe you use like capitals. You're using like capitals. We got Popsy in the chat. Full port long. Yeah, full port long. Godspeed, Godspeed. You guys are new in this space. Long as the play. Alright, go for it. Go for it. I will not stop you from taking a long. I'll put him timeout because encouraging chat to buy gold. No, it's all good. Let him encourage the chat. Let him encourage the chat. That's how character is developed, remember? You gotta develop character. Don't deny him a chance to develop character, architect. Give him a chance to grow. Every candle is more than 100 pip. No way I trade gold today. It's like a child, you know, when your kid wants to like do something, where when your kid is about to do something stupid and your wife wants to butt in, you gotta put the wife hand and say no, let him do it, let him do it, and then he does that stupid thing, and then you tell him, see, I bet you're not gonna do it again. Sometimes we need that, you know. That's one thing that I always say, like, I personally don't like apologizing. I think even something like an apology doesn't make sense. You know, don't apologize for anything. Just don't repeat the mistake again. Because apology means that you did something wrong. You know, but doing something wrong is sometimes what you need to do to get better to do something right again. So I'm against apologies. Even when I'm wrong, I never apologize. I just learn my lesson and I don't do it again. Because life, how are you ever going to learn in life if you don't lose? You have to lose. It's a positive thing to lose. The problem is in school, we always get taught like it's a negative thing. So even through education, it's always been teaching you it's negative to lose. Because when you lose, you get scolded by your teachers, you get scolded by your family, and it's a negative thing. But in reality, it's a positive thing. Because a lot of people get too fearful of losing by the time they get into their adulthood. And if you never lose, that means you're not trying. And since when has it become uncool to try? Right? It's not uncool to try. You gotta try, you gotta fail, you gotta lose and get back on the horse and do it again. Because most people are not willing to do that. Most people are too afraid to do that. So they stick with the crowd. And when you stick with the crowd, you get what everybody else gets. So you have to be okay with actually just being your own person in that sense. Looking at defeat as something.
191 has become a member.
Yeah, there's a small range here to fill. This range is about a 470 pips. Price is flirting with the idea of filling it. Definitely still a bit risky. Breaks above that high, could rip back in quite aggressively since we're still moving down bearish. Down about 57, 5.76 still. If you guys are on short, GG's. We've been like done with the shorts, my friend. We've been streaming since the London Open. There was a short position we had here. There was a short position we just recently called right here. So I don't know about you, but the longer you're in the market, the more chances you give yourself to lose. The longer you sit here and the more trades you keep calling out, the higher the chances that you're gonna get into a losing streak. So in any case, TFX concepts are done. We're most likely coming back in, if anything, by 6 a.m. Eastern. That's like in 30 minutes. So maybe it is your time for longs, so go for it. There was a time that we could hold a position for days of 0.01 lot, size on gold to reach $100 profit, but now it takes seconds. Yes, exactly. What's going on with gold? Amazing things are going on with gold. Amazing things. Taking profit from here, easy, $857. All right, good for you. If only I could claim my old title, I'd get them all in gear.
At Zoro Shukana has become a member.
Hey, thank you for the membership. Amazing things are happening with gold. So I think this is, don't worry about whatever these pullbacks, just all profit taking. There's nothing news wise that Trump said or did that's making price come down. This is just a long overdue pullback. So we wait for the next fundamentals, right? Gold has climbed 17% since the beginning of January, while silver rallied 40% over the same period. Silver has been up like 250%, I think, in the past 12 months, and gold is up 90% in the past 12 months. Investors have flocked to safe haven assets so far in 2026. Was as foreign policy actions by the US, including the seizure of Venezuela former leader and threats to annex Greenland, have been a major driver. I would say, chat, make sure you are paying attention to the news that's going to be coming out this weekend. Make sure you are following those relevant channels, because that's going to be a huge driving factor to how that next weekly candlestick is going to open and behave. Whether we're going to crack 5K and keep moving down, or whether we're going to keep moving up. Watch closely, because Mr. Trump is going to, Trump is going to like to say something over the weekend. I'm pretty sure he's going to tweet something, or something is going to happen. And that can already give you a kind of like an insight of why the Asia Open behaved like the way it did. He just rejected. Previous 5 rejected. So it's attempting it again here. It's not a break. It needs to break 50-70. Accumulation. So accumulating right next to that zone. Like, would be nice if it pulled down. If it wants to really break that zone, that's typically what would happen. It would pull down like this and then start creating like some kind of a support, and then properly re-breaking these highs to continue like getting through that zone. That's what you typically see the market do before it starts to break key levels. It will need to accumulate. There's the same way that we saw before we cracked $55,000 here. It's the same thing that we did, right? So we needed to like put some bullets into the barrel, as we did right over here. And then when it was ready, then we're gonna shoot it out. Boom. Then we can break through 5K. It's the same thing with that resistance. It's gonna need to do similar mentality. That's typically the market when it does that, and when it's doing it at a key level like this. Because, it's a lot of weight to get through the zone, especially when we're moving down already so heavily bearish. It's a lot of weight, as you can see, for the market to get through that level. That's why in the previous 5-minute here, you see it's looking back at its buddy and it's saying, hey buddy, what's going on here? It said, oh man, I tried to get above this level here, but there are too many sellers. He's talking to his buddy here down here now. It's like there are too many sellers, so I had to come back down here. And it's like, okay, what can we do, buddy? If we want to get up, let's just get our forces together. Let's build like a strong support here. that we can support the idea that price can keep moving up. Saying, all right, buddy, let's try this again. Then you got to investigate the 1 minute. Then you say that's what the 1 minute is doing here. You see, the market speaks. You just have to listen. You have to listen and then you reply when it's time to reply. All right. That's what it's doing right now. So the point it starts breaking the highs again by like 50, 80, then it's going to start to attempt again. Him and his buddy over here, they're going to attempt to kind of push through that level again. But as of right now, if they can't keep lifting that way beyond that point and it starts re-breaking these lows, there's a pretty good chance that you see that bearish continuation. Candles are going to come like this and then continue like selling off as the price has naturally been doing already. Because we haven't yet seen the buyers really take over any key levels in the market yet. You just have resistance here by 50, 70, and we have not created any significant new higher highs. You see, we just have like this little fake out situation below here, creating an inverted head and shoulders, but this would be kind of like that key level. Kind of like that key level would need to get beyond first, boom, boom, and a respect, and then keep going up. So that's what it's currently attempting to do. So it's still in the beginning phases of doing that. So here, him and his buddies are gonna try and push up again. He got some reinforcements here on that 8 SMA holding right below Kiss of Death. Just I gotta wait and see if it actually pops through that level right there. Then it's just gonna increase their chances of actually having that corrective move towards a resistance here by 51.18. That's all that means. Definitely a counter trend move, but their chances are going to increase once that happens. That's why wick breaks are super important. You know, if you don't get a wick break, then it reduces the chance for it to go up. You see, like here right now, it's still fighting that area. It's still fighting that area. It's still fighting that area. Deciding what it wants to do. You see, it's thinking. It's thinking here. It's thinking, you know, we could sell. Selling is nice. Selling is easy. There's a lot more sellers in the market than there are buyers. So they get through like 50, 46. Then we're going to sell off. At the same time, we're thinking, but you know, we already peaked at like 8%. What about a buy? You know, maybe a buy above here. Then we could have some kind of a retracement. So it's still deciding what it wants to do. The flip side of that is now when you have the Trojan horse, when we call a shark in the water, where it's just waiting to say, okay, you know what? Let's sell off, but first, let's grab some orders here. Now, that's what we call a fake out. And you can't really predict a fake out. You can limit the amount of fake outs by sticking with the overall trend. But you got to be very convinced about the time that you trade and how you naturally would see price behave. So for me personally, by this time, having given my entries already, I would already been out of the market. So all I can do now is pepper trade and speculate. So you see buyers have taken it. They've finally taken it over. So you saw that little buy pressure come in over there. So that only increases their probabilities that they can at least have that. If they want to have like a buy retracement, that increases the probability they can actually have some kind of a push now here at this point. And it's still a point A. Like it's still one of the first buy distributions, I would say it is. We haven't had any buy. This is actually the first confirmation of a buy right here. Majority of it has just been sells since the London Open. You gotta sell here, you gotta sell here. So this is the first attempt actually at a buy that's currently in play right now based off TFX Confluence. That's the first attempt. The first try at a buy. See BTC, nothing too interesting. How much is that push already? What the hell? That was already 45 pips? Doesn't even feel like a lot at all. That was already freaking, let's say a break of this high right here. That was about like almost 60 pips, Chad. What the hell? Holy. Holy moly. That would already been for me. Let's see. That's 57. That would have been a 3.5 risk to reward. So that about like, with my risk, that would have been about maybe 7%, 6 to 7%. Quick steps. Nice. I'm out. See you guys next week. All right, Kev, just see you next week, man. Enjoy. Enjoy your weekend, sir. Godspeed into next week, right? Spartans!
Spartans! What is your profession?
Once you learn how these patterns move, you'll be able to trade any market because your eyes will be trained to see it. Yes. It should be like tying your shoelace. Scared of the volatility? I think I'm gonna head out here, everybody. I appreciate everybody tuning in. Welcome to TFX Tribe, to the new members here today. We trade from the 3 a.m. Eastern. If you're new to the stream, that's gonna be the London session open. We'll be back on shots obviously next week, Monday. Keep tabs on what's happening over the weekend, as Trump will potentially say something that moves markets. So just be ready, chat. And I will see you all next week. Let's smash markets. Take care, everybody.